And then secondly, let me share my screen. Just let me know if you can see my screen, hear me, see me, everything's all good. And yeah, we'll kick this off. Um, yeah, everything should be calm. But yeah, cool. So yeah, as we saw today, we had a very, very good day in regards to gold. I was just looking at next moves that we could potentially find for this week and potentially moving forward as well. So yeah, but yeah, today was a very, very good day for gold when I sent it out in the morning. So I'm not sure, is this part of the print screen? No, this was something else. This was Naz from last week. Naz from last week was really good. I didn't send it out to the team, but it was just one I saw quickly on Edge and I took it. But yeah, gold, I'll break that down and then we'll just actually have a look at the week as well and see what we can find as usual. So firstly, let's just look at the DXY. Last week, when we was doing this call, I did say I would like to see something like this, and then which means everything else should drop. So when I drew this last week, when we was here, I said this was what I would like to see, and it's kind of happened. Okay, where we see price dropped into this area. I would have liked it to drop lower. Didn't quite drop low enough, but it still did what it needed to do. And then, as you can see, price is now shifting up towards bigger targets. So obviously, we know the DXY is shifting up, and obviously this was old price action that we wanted to see but didn't quite get. No, why is it not highlighting those ones? Okay, let's just do it the classic way. Okay, so yeah, when we saw, why is it not highlighting these ones? Okay, good. Just delete them. But yeah, when we saw price moving up like this, then obviously naturally you would expect for everything ending with USD to do the opposite, right? So again, that's why again I was looking at cheeky opportunities for Euro USD today. I wanted to buy up just to sell down. Didn't quite happen. For gold, we got our sell with that. And various other things like NAS 100. Yeah, excuse me, NAS 100 US 30, we got the sales for that, but they just happened way too quickly, so I couldn't even try to catch it. But yeah, we'll break things down. But anyway, with the dollar, this is something we have been expecting for some time, and it has happened. From time it was up in here, I remember when price was here, and I wanted it to just make that move and then drop, but it didn't. It just created equal highs. So I know this is a future target. But last year during October, we got that right where we said price will come down here and then we potentially will target either here or here. And we've done, I mean, it's nearly a year on, and we've kind of done just that. So the next moves we're seeing for the dollar potentially is shifting up into these 110 areas and potentially 112 areas. So we're looking at these kind of areas now for the dollar. We just have to firstly see what's going to happen when we do get up into this kind of supply area in here and then obviously beyond. So yeah, I think this would just now be buy liquidity potentially. I think that would just be buy liquidity to be honest. So we'll just see that as buy side liquidity. Okay, so for the future, when we're looking at this, this is what I'll potentially expect just this to be a buy side liquidity. Then on a daily, we've got these two supply areas that I would favor. So yeah, we'll just see exactly how that plays out and how this week plays out will be crucial to see if this actual area holds out. So far, so good. We've taken out a first internal structure. Now we're looking to take out this external structure through here. So internal is done. Couldn't potentially see pullbacks, who knows, during this week, just to do what we love to see, which is our signature move. Let me just delete these blue lines because they are throwing me off a little bit. Okay, so let me just delete this one as well. Okay, what the hell is this black line there? Okay, cool. I'm not sure what all those lines are. But anyway, so we've taken that internal structure. So what we could potentially then see moving on throughout this week would just be something like this potentially. Okay, we've taken that internal structure. That's done. So now we can potentially see price coming into this area and then shifting away to target the external structure. Okay, so in an ideal world, that's what I would love to see for price to do. So again, we've taken out this area now. Okay, so we know that's a structure break right there. Okay, trade ideas, you already know what that gives me. So again, similar what we'll do exactly on the 5 minute or 1 minute time frames, exactly the same thing that's happening on a daily. Is the market is fractal, and I'm seeing some familiar faces. I know I'll open up this call to some old folks as well. So you guys probably haven't seen me trade for a couple of years, but here we are. So yeah, this is same thing we're always looking for in a 5 minute and 1 minute as well. So yeah, with DXY, we can see potentially that happening, or who knows, it might just shoot up to target this external high right here. So we'll wait to see how that plays out. And if we do get a pullback just like that for DXY coming up this week, then obviously we expect pullbacks for Euro USD, GBP USD, gold, USD JPY to the opposite, and then yeah, various other things. So yeah, for this week, just watch if the DXY does a move like this, then obviously you know what to do with Euro USD and all the rest of those pairs, and then see if you could then do the reverse trade and then take out potentially highs like this. But obviously, if you're selling the opposite of Euro USD or whatever else, then you'd be looking to take out lows. Just doing the opposite of what the DXY is doing. So that's what I see happening for this week. Potentially just curious to see how it's going to happen. Is it going to happen straight away to tap into this demand again, or is it going to come for this high and then make a pullback? One of those two scenarios I believe will happen. It's just what order would it happen in? And then obviously everything else would then dictate exactly how we take our trades moving forward, right? So it's just a matter of time before you understand what the hell should happen. But right now, I think price is definitely coming for this buy side liquidity at 107. And then yeah, everything else should follow suit. So that's what I see for the DXY currently. And then yeah, like I said, everything should follow suit. So again, if we do look at something like the Euro USD, which is directly correlated, again, you're seeing that kind of move. So it shifted away from this 4-hour supply that I was looking at last week. Okay, shifted away from that. Okay, again, very opposite to the DXY. It does literally exactly the same thing, just in opposite direction. So we shifted away from that. Again, you can see we've taken that internal structure, and now just that external structure that we're just waiting to see if it does take out, which is why I was trying to be cheeky today, but I didn't win 2 times. Okay, it took me out 2 times. So I wanted to buy in anticipation of this pullback coming back into this area and then selling it down to take out external structure there, sell side liquidity here. Okay, so that's why I was trying to be cheeky. I mean, it's only 7 pips stop loss 2 times, right? But didn't work. But anyway, 290 pips or 300 pips of gold. I guess that makes up for any losses, right? I hope so anyway, unless you are just over leveraging your whole life savings. But yeah, it was 14 pips that we lost on Euro USD, but I'm hoping my 290 pips or 300 pips made up for it. Okay, so yeah, that's what I'm looking at overall. So again, very, very similar to DXY. Again, where again with DXY was targeting a high side, right? Was targeting that high side liquidity. Okay, remember was targeting this high side liquidity or through here as a buy side liquidity. And then similar to Euro USD, again, I'm just targeting these lows, and obviously you can see the big sell side liquidity here as well. Okay, so when we're looking at all of this, everything's aligned. It's just a matter of time before it happens, right? So that's what I'm just patiently waiting for, which is why, again, like I said, we've broken these structures internally. We just need to break the external structure. This is why I was looking at a pullback for here, because we've got this gap, as you can see from here to here, and then sell it down. But again, we just have to be patient to see what happens. And it is NFP week as well. So again, patience is everything. Okay, patience is everything in trading. So again, similar to Euro USD, GBP USD, same thing. But again, we've got the kind of EDM happening here. Again, we've got this is pushing past its 4-hour block, whereas the EU, okay, stayed under its 4-hour block. Okay, so you get that divergence. Okay, it's always good to see divergence in the market with correlating pairs. Okay, so we've got GU pushing higher, but EU stayed under. Okay, so now again, similar to EU, again, if the DXY does what we want it to do, then naturally we'll pull back and then start coming crashing down towards this demand area. And again, big sell side liquidity right here that was printed. When was this? This was 22nd of April. Okay, so that'll be the target. We're already taking out a little trend line in here. Okay, and then that we use that as fuel to move up to take out buy sides and more higher price actions through here. So yeah, we've already got that happening. So it's just a matter of time. But right now, I do like the look of EU slightly better. Okay, and then yeah, we'll see exactly how things play out. So again, those are the most correlating pairs with the DXY right now. So we should see exactly the opposite happening technically with those. And then everything else is kind of more, yeah, you already know how gold and everything else moves. It doesn't respect no one. Okay, but long term, I do believe at some point gold will come back into the 2,400s. Okay, or just kind of 2,400 flat on. That's what I'm potentially waiting for in due time. We've been building up shit ton of liquidity all throughout here for a long time. Okay, various trend lines, various support areas, various equal lows. Like it just so much liquidity being built up over here. We are at all-time highs right now. Okay, so it's just a matter of time where I'm gonna see structure. Well, I want to see structure shift. Okay, and then we start coming down for these sell side liquidities and everything else. Okay, so it's just a matter of time. But for now, we just play the long game. Okay, we just play in line with what the structure's given us, and that's all we can do. Okay, there's nothing else you can do. We don't control these markets, like I say time and time again. All we can do is literally control where we enter and where we put our stop loss. That's literally all we could control. Everything else, you say Jesus take the wheel, and that's literally it. Okay, so yeah, with gold right now, again, these are the targets I'm looking at. Obviously, I'm looking at the sell side liquidity. This is what pushed price up into these areas here to reach the new all-time highs. So yeah, I'm just patiently waiting for price to then take that out. Okay, so let's move into the 4 hour for this. Okay, and then I'll start breaking down exactly why I took the trade today and how you can take the trades moving forward. Okay, is there any questions or anything so far before we proceed? I haven't even been looking at the chat box. And meal, but I did get some out of in the end. Okay. Yeah, I know. Yeah, it gets like that. This is the game, man. This is the game. But yeah, sometimes you just have to be really quick and just understand what you need to do and just execute. Okay, but sometimes the markets will move too quick and not present that opportunity quick enough. So let me just shift right into the 1 hour. You guys already understand the full picture. Okay, so looking at this today, okay, so we're on a 1 hour just looking at this. Looking at this today, I know this is the all-time high. This is the highest point, which is, I've drawn it clearly as my buy side liquidity. That's the all-time high for liquidity to be taken. Okay, so again, I know there's some people on this call that haven't seen me trade for some years or some time. But again, we trade slightly differently, where we're not really looking at order blocks no more unless a certain requirement is met. Okay, so again, we're looking at more liquidity. So again, I've got my high side liquidity, got my low side liquidity. So everything else in here is just manufacturing its way to either take out the low side or take out the high side. So I already know that. So everything I do is in conjunction with exactly that. So again, you can see if I bought here, what was I doing? Targeting this high. Okay, where's the other buy we took? Okay, if I bought here again, targeting that high again, and it just the same things that's happening over and over again in different sequences. Again, trend lines taken out. We're literally taking out every single piece of liquidity in the market. Before we just used to target highs, but now we're targeting everything. Okay, this is the liquidity game now. We're targeting everything. We want trend line traders. We want support and resistance traders. Okay, we want yeah, I mean trend line traders, support and resistance traders, and now smart money traders. Okay, which again is crazy for me to say because I was brought up on smart money. Okay, but now that's now becoming liquidity. So now we're taking out smart money traders. Okay, so the game is liquidity. Okay, the game is literally liquidity. So yeah, we see exactly what the structure was here. We understand what we wanted to see, either the high side taken out or the low side taken out, right? So everything we've been building up since we've been in this area was to either take out highs or lows. So you can see our target is buy side liquidity here. I mean, a very big one. Okay, targeting all this area here, which is why from these areas it's kept on buying and selling in between. Okay, once we took out this sell side liquidity, I was like, cool, let's go for the highs. And then we just kept on doing exactly that. So again, smart money trap. It pains me to say it, but yeah, I mean, I would have placed the trade here before and lost, but now I understand what it is. So again, I'm targeting these areas now. Okay, same as here, smart money trap. I'm targeting these areas now. Okay, so all these kind of things that you're seeing, it's now liquidity. The game is liquidity. Once you understand that, you understand how to stay out of trouble. It doesn't mean you're not going to lose. You will lose because you can read the market wrong. You can look at the wrong market structure, or whatever it is, and you lose. Okay, but the key thing, like I said, what is the key thing? All we can control in this market is where we enter and where we put our stop loss. That is literally it. Okay, that's literally all we can control. Everything else, like I said, you'd say Jesus take the wheel and you let the game do what it needs to do. Okay, so yeah, so looking at this again before we started today's price action, so we was let's say obviously we're sleeping. Okay, we're sleeping. So I mean, if you live in the UK, hopefully you are sleeping. Okay, so you're not trading around 2, 4 o'clock in the morning. Okay, so when I looked at this yesterday before the market actually closed, I saw that we took out the Asia session high here, okay, during London, and then price just went sideways. Okay, it just stayed there, like nothing happened. Okay, then when I noticed I woke up, I saw these equal lows. So I said, oh, interesting. Let me just actually hit play now. What time is this? We're on Asia session now. So when I woke up, I saw that we created equal lows. I was like, interesting. Okay, I was like, we've not really got anything to target to the high side except for this buy side liquidity, which is way up there. Then you have to think logically. What makes more sense? Would it be more logical for us to come for this buy side liquidity right now, or would it be more logical for us to come for the sell side liquidity? Okay, rhetorical question. You all should be saying sell side liquidity. So when I understand that, I'm like, cool. That's the first logical thing. I'm like, all right, perfect. What else have we got to target? Prices come up out of Asia session to induce the high side. What did it print during Asia session? Well, this Asia session and this Asia session created equal lows. And again, this picture will never get old. Okay, it created equal lows before going up. So I'm not interested. We've already taken the high from yesterday, right? So this is the high, and this is what price done yesterday, literally. So we can see the high, price done that yesterday. So I'm not interested. Then it came down, created these equal lows. Okay, comes down, wrong picture. comes down to create this equal lows. So I'm not interested. It's literally looking exactly like this, is it not? Okay, high is taken out, boom. Then it comes down, create equal lows. What do you think is going to happen next? Okay, we're going to come and mitigate this. Okay, that's literally what happens. So again, you see that exact same thing happening. So again, let me just go down into the 15-minute and you guys can see exactly this happening. Literally, it's the same shit all the time. Okay, so again, what do we get? We get equal highs or just liquidity printed. Price comes up, takes it out. Okay, so it's induced the high side. Perfect. Okay, when we leave this, what do we leave? The IPA, the FEG, whatever you want to call it. Price does his dilly-dallying, creates equal lows, exactly like the picture. Okay, does his dilly-dallying, creates the equal lows. Then what do we know is going to happen next? Mitigation. And then what do you target? The lows or whatever else that's below that. Okay, it's just a sequence. Like I said, this trading game is like a dance. Okay, so when I sent this out this morning, it was like 9:30. I saw it, right, and I sent it out to the team. Again, I just saw this. I was like, what's actually going on? Okay, what's actually going on? So we already took the sell from here last week. Okay, so I was like, interesting, cool. We've done that, perfect. And even this, I got into this way later than I would. I marked it up differently because I like to adjust things sometimes when I've missed a certain piece of information, and then I train my eyes to see that information all the time. Okay, so how I now I remember I was buying through here, and then when price started reversing from here, I was like, why is price reversing from here? Then I looked in the 15-minute. I was like, how the hell did I miss this very simple information? I was looking in a 5-minute, which is why I missed it. I didn't see the structure. On a 15-minute, we could clearly see, okay, we didn't come for the high. Okay, we didn't do a medium inducement on that high. But what did we do? We broke the structure through here in London. Okay, we broke the London low. And then from there, again, same signature setup, gap, candle. And then what do? Target the previous low. And then, yeah, you do exactly that. So that trade, I got in around this area here, okay, whereas I should have got in there. Okay, I had to literally go in a 1 minute and 5 minutes to even get the execution. It was messy. But when I looked at it back, I was like, how the hell did I miss that simple? Like, it's so simple. It's like, boom, it's right in your face. Okay, so again, sometimes you just have to adapt things and then understand what you should be looking for and then do exactly that. So when we see that happen, then I was like, cool, already got that move happen on Friday, was it? Yeah, Friday. I remember this was Friday. Yeah. So we had that move happen Friday. Then yesterday, nothing really happened. Okay. We took out that high and then we started playing games in here. So then when we open up today, what do? We induce the high to always go lower, or we induce the low to always go higher. So when we induce the high, what's chilling here? Okay. We've got these previous liquidity zones, IPA, we've got this candle. So I'm like, cool. Okay. And even I think on a 5-minute, I found an entry there as well, but I said 15 minutes should round up, about 27 pip stop, and then we target sell side liquidity. Remember how we started this whole thing? It tells a picture. So you guys need to understand exactly what the picture is telling you and what you need to do to execute. I could have lost here. Okay. And I'm in the morning, I'm did I print screen it? I didn't, did I? I think I just put it on in the groups. But anyway, in the morning, you saw when I put, what was the text I put? If anyone remembers. What was the text I put? Just put in the chat box. I'm gonna type here as well. But what was the text I put before I do it? Okay, if anyone remembers when I sent out the signal, what was the text I put in this 15-minute supply area? Okay, before I type it, let's see if anyone was paying attention. Or just literally just waiting for signals. But does anyone remember the text I put in there? And I know some of you are probably going to even look at the picture, but anyway, I put potential SMT. Okay, that's what I put. Let me click off this drawing thing. Okay, I put potential SMT, meaning potential smart money trap. Why? Because we're in an area that, yes, it has taken out the high. It has done that, created equal lows. But this could be a potential trap because this is a previous day's high. Previous day's highs, previous week's lows, previous month's lows and highs. These are areas that you want to be targeting for liquidity. Because if anyone is trading this, where's their stop loss? Right above here. Did we actually mitigate anything when we took this out? We didn't. So now that becomes a smart money trap because it's just liquidity basically sitting here. It's not tapped into nothing. It's not done nothing. With something like this, okay, boom, this will be a mitigation block. Whereas if this, it's just hanging around. It's just hanging around. Okay, that's what that's doing. It's just chilling. So with this, I said potential SMT because it's not mitigating anything and it's just there. It's just there for the sake of it. It's like that friend that just goes to a party when it's not even invited. Okay, that's what this candle was doing. It's just chilling. You're like, why are you there? Okay, who invited you? Okay, it's just chilling there. So I say potential SMT because it's not mitigated nothing. That's what you need to understand. Okay, and then price. I was looking at this and I was like, I'll happily take my chances due to the market structure. Okay, I'll happily take my chances due to the market structure, and that's the only thing that we've got to take out this low right now. And like I said at the start of the whole thing, what made more logical sense for us to push all the way higher past all this price action, all this resistance, everything else to take out this high, or do we take the path of least resistance? Because once we do take out this low, there's nothing stopping us. Okay, there's literally nothing stopping us. Like there's literally no price action saying, yeah, you're not getting any further. There's literally nothing. And what else have we got here? All these trendline traders. What do we want to do with them? Take those guys out as well. Okay, so there's literally nothing stopping us to get to the sell side liquidity. So logically, I said, what's the path of least resistance? Even though this might be a potential smart money trap, I said, I'm going to take this trade because even if I lose here, no problem. We just readapt. And what do we know? We still got buy side liquidity and market structure on our side because we haven't taken any session low yet. Okay, it's just a simple things and just a logical way of thinking. Don't overcomplicate the markets. Don't overcomplicate the charts because when you do, you start thinking about stuff you shouldn't even be thinking about. Okay, and then you overcomplicate things, and then a simple trade like this that taps in, boom, okay, and then starts shifting down. Like it's literally that simple. Okay, so when I said, and I know some people are confused about this, I'm going to just break this down as well. When I said, I think it was even John as well. John asked me what I said, either get into the extreme entry, which is this, the extreme entry, or wait for confirmations. Okay, why would I rather wait for confirmations as a safer trade? I'd rather wait for something like this to happen on the 1 minute or 5 minute after we have internal breaks or whatever it is. I'd rather, like, as a safe side, that's what I would rather wait for. But when you experience enough and you're like, you know what, what's the risk? 25, 27 pips, you can take it. Okay, but what's the safest way to get in? Okay, I mean, it didn't really happen in this occasion. Okay, it didn't really happen on this occasion, but you can maybe look at this in 1 or 2 ways. So in a 5 minute, we didn't really see it. Okay, but I could see it already on the 1 minute. I already know. I haven't looked at this before. Okay, but I can already see what's potentially happened on the 1 minute. So where's our entry? Cool. Again, understand the markets are fractal, meaning it's the same shit on every single time frame. So what do we like to see if we want to get into an entry? We like to see an internal low get broken or an external low get broken. So what was the latest price action to push price up? Okay, we had this and then boom, this and then boom, and then this area in here was the latest price to push price up into this area, right? And then as you can see from here, price starts fading to break higher. So now we've got this internal low. Okay, this is a minor structure break. This is the internal low. And then this in here would be your external low. As we can see, price breaks the internal and the external. Okay, internal, external, done. So we know now what we're looking for. We're looking for pullbacks into these areas. Okay, so when this internal one was done, where's your entry areas? Okay, we're looking at potential mitigation block right here. Okay, this candle and the IPA, boom, that's one. And then potential mitigation block number 2. Again, gap. Okay, I won't say block, but FEG, IPA, whatever you want to call it. Okay, then we're looking for that in there. Okay, one of those 2. That will be your entry. But we already know we're in a 1 minute. So if you wanted to take this trade, what could you have done? Okay, you could have said, you know what? I know the best possible entry is right up here, but what's the chances of it getting right up into there? But firstly, you have to ask yourself, what's the risk? Okay, if you placed it right there, what's the risk? Okay, we've went from 27 pips to now 15 pips if you want to round things up. Okay, are you willing to risk 15 pips to get, I don't know, what was this? This is 340? Anyway, yeah, let's just say, are you willing to risk 15 pips to get 300 pips? Okay, ask yourself that and then adjust your lot size accordingly. Okay, so now you know within one of these 2 areas, price should react and drop. So you don't know which one is going to be. So what should I usually do? Or what do I usually do, should I say? I usually go for the safest one or the one that's most likely to hit. So it'll be this lower area. And as you can see, price hits this lower area and then boom. Okay, this is not something I looked at in the morning or this is not how I entered, but I'm just looking at it now. And I was like, usually around our entries, the same thing tends to happen. So someone like John, when you ask me what's the safest entry or what should I do? This, okay? Market internal low, market external low. If one of those break, you just wait for the pullback into a gap or mitigation candle, you execute. Okay, simple as that. Don't overcomplicate it. So again, for this one, for this example, we had 2. We had a minor structure shift in here for the internal, and then we had the actual break for the external, and then price pulls back. That's its thing. Okay, firstly, when it breaks the internal, it doesn't break the external, it pulls back into here, then it breaks the external, and it comes up again into that area. Okay, I mean, personally, I would have preferred if it went higher to have perfect mitigation, but life is not perfect. Okay, and then if you miss that, guess what happens? Let's just borrow one of these. Okay, what happens here? This was a latest down candle that pushed price up into here, right? So what happens? It breaks that. So what do you expect? Pullback. So guess what? Your next entry. Okay, your next entry, boom, there you go. Where would you put your stop? Did I delete that other one? Okay, let's make a new one. Okay, short position. So again, you've got a break right here. You've got this gap right here. So again, to be the safest, you enter right in line with this IPA, FVG, whatever you want to call it. Then you put your stop above these highs. Okay, so now again, we've got about 12.5. Let's just round it up to 13 pips. Okay, 13 pip stop for 300, sorry, pips. Would you take it? So we've got one entry. Okay, we've got two entry. Okay, and then obviously the big one, the big granddaddy. This was it, 27 pips. So you had three potential entries in here. Okay, if you all want to include this one, four. Okay, so you had three opportunities to get in here at the extreme, which is what I did. Okay, or with the minor structure shift in here, or the major structure shift in here. Okay, three opportunities or four if you want to include that. Okay, off this one trade. And then what do you like? Just literally understanding that. Okay, I mean, you see how I've broken it down from literally the 4 hour to 1 hour to 15 minutes to 5 minutes to 1 minute. Okay, just understanding that simple concept of we need to take out this high or take out that low. Simple as that. Don't overcomplicate it. Okay, literally don't overcomplicate it. Okay, just understand your previous day's highs or previous day's lows, and especially when an opportunity like this is presented to you. When you see two Asia session lows create equal lows, you're like, bruh, it's almost too easy. It's like they're not even whispering to you no more. They literally got a microphone saying, hey, we're about to take out this low. Do you want to get involved? That's literally what's happening. And then you just say, all right, cool, thank you for the information. And then you just take the trade. Okay, simple as that. Okay, so we wanted to target the sell side liquidity. Hasn't got taken out yet, which I'm very curious about. Okay, hasn't got taken out yet, but time and price is very key. Okay, time and price is very key. So again, which is why you see my Asia session, purple, my London open, green, and my New York session, yellow. Okay, time and price is very key. So when all these things are happening in cycles and understanding what's going on, I low-key understood what should happen, which is why I wasn't scared to move my stop from here or whatever else. Okay, yes, I took partials 3-1 is what I usually do. And then the rest I let ride. Okay, but once it broke this low in here, I'm like, the structure is still to the downside. Okay, so when price came down here and then we came all the way up here, I was looking at this, I was thinking, would it do it? And I'm not gonna lie, I didn't expect it to do it, and it did. Okay, so on the 15-minute, it actually happened. That's what I was looking at. So when I say do it, I mean because this will be my ideal entry where we break a previous low and we come back into IPA FEG area and then we go down again. So when we came short of this and we broke this low, I was looking at this thinking, would it come all the way back up into here? Would it play in here? And it came all the way back up into here. And then yeah, started playing games. And then again, time and price. As soon as my New York trap price kicks in, which is 2 p.m. UK time, what happens? Price just instantly starts melting. Okay, so time and price is a very, very key thing. When you understand that, everything else changes. So again, I just want to show you this example. Okay, because I didn't actually see what happened in New York. I was on another call. I was just curious to see what happened. And yeah, exactly what I was just preaching to you happened. So this is going to look a little bit messy, but I'll do it on a 5 minute firstly, and then I'll do it on the 1 minute. Because I know this for sure looks better than 1 minute. So anyway, we've got price doing all of this in here. But what do we see? Okay, this is price that now pushes up past this high. So what do we know? If price wanted to go higher, it will not cross past this area again. It will keep going higher. But what do we see? Price violates this area, okay, and this part of light bulb. Okay, price violates this area, which gives us what? A minor structure shift, right? So we now say, cool. If price then comes back into a mitigation block or gap or something in here, chances are we can sell. Okay, so just like that, boom. I mean, because of the wick, you might have to put your stop above here just to be safe. Okay, or you can just put above this one. Okay, more than likely, I mean, yeah, just put above this one. So you got about 21 pips, and then you target the previous low or the original target. Okay, or just do a 10-1, which is what I usually do. Okay, boom, the 10-1 is right there. Where is it? I think I need to move the screen more. And you know, forget it. Let's just target this low because that's where we wanted our price to go anyway. So again, we found 5 entries for this one trade. Okay, 5 entries now for this one trade if you include in the other one that we found higher there. So there's 5 entries for this one trade now. Okay, so again, the same things that I just showed you is the same principles happening over and over and over again. Okay, so if we go on a 1 minute and we'll make things even cleaner, and then I'll answer some questions because I see my chat box, peripheral vision just popping up. if we find where we are. All right, cool. So again, 1 minute, what do we get? Again, like I said, this is the high. I mean, this is the low that pushes price higher. Boom, we break that. So what are you looking for? You're looking for gaps or mitigation candle. So even, I mean, yeah, putting our mitigation candle above here is calm. Okay, because there's nothing else for price to tap into here, but I can see that on a 5 minute. So yeah, through here, again, what do we get? And if you want to be even safer, okay, before this even came in, what do we get? Okay, let me do this on replay mode actually. So we can make this even cleaner so you guys can see exactly what I'm seeing. Okay, so before price comes back up, okay, what do we get? We get this gap right here, right? Okay, and there's this gap and then this candle. As you guys always see, when I'm doing my entries, I put a green, which covers what? The gap and the candle. So now I know, cool, my entry's there. Okay, and usually I will put my stop here, but just due to the way this price action specifically was, I mean, you could do it, okay, and have it as a tight stop. Or if you wanted to give it extra breathing room, just do that. So it's totally up to you how you want to do it. Okay. I mean, if the price action was cleaner, I would have put it just above there, make it 17 to 20 pips. And then, yeah, you see what price does. Okay. Goes away, taps in. Okay. It doesn't come right up into the candle, or does it? Remember it coming into there, does it? Just about, yeah, there you go. Okay. So it comes right up into the candle. And then away we go. Okay, so this is literally the same thing that's happening all the time. So when you start to understand these little concepts and understand the entry techniques that I'm using, okay, then you start to get very, very low risk, which is why sometimes when you see me sending out 4 pip stop, 7 pip stop, and you guys are thinking, what the hell? Like, yeah. And even if you lose, you're like, so what? It's 7 pips. And some of you I do know, some of you I talk to firsthand, that because it is a 4 pip stop or 7 pip stop, you're like, you know what, fuck it. I'm gonna put my lot size to like whatever times 10. Don't do that. Stay with the same parameters. So again, this is why me personally, I work with the dollar amount. Okay, so my lot size is based on a dollar amount. Okay, depending, let's just say Euro USD, okay, is a 4 pip stop, and then I'm trading gold with a 30 pip stop. Do you think I'm going to use exactly the same lot size? No, that's suicide. Okay, so what do? I work with a specific dollar amount. Okay, so let's just say, for instance, in my trade, I'm willing to risk 200 per trade. Okay, 200 per trade. So if my stop loss is 4 pips, I'm like, thank you, Lord. I can load up my lot size. Okay, but as far as my risk is £200, okay, I'm happy for that. But then let's just say I'm trading something like gold and my stop loss is 30 pips. I can't use the same lot size. So again, I adapt my lot size to then be £200 worth of risk. So whatever that lot size is, that's what the lot size is. Okay, so obviously it's in my best interest to get the lot stop loss as small as possible, because then I can use a bigger lot size and make way more money. But if it's not, and that's the opportunity, like gold this morning was 27 pips, I'm like, all right, cool. I'm still going to risk £200 anyway. Boom, enter the trade. Okay. If you're keeping your consistency exactly the same all the time, you've got nothing to worry about. You could give yourself a certain amount of trades per day. Say, you know what? I'm willing to lose, I don't know, let's just say on a normal account, I don't know, £100, £200 a day. Okay, you split that up into however many trades, 5 trades, 10 trades, and you say, cool, what's the dollar amount that I'm willing to risk? And then you take your trades accordingly, and you adapt your lot size because of that specific dollar amount or pound amount, whatever it is. Okay, but that's once I started doing that, it changed my trading entirely. Okay, it changed my trading entirely. My risk, I was like, cool, I know exactly how much I'm going to lose every single day if I lose. Okay, I know exactly how much I'm going to lose every single day if I lose. Okay, but if I win, boom, like it covers any potential losses in the future. So for instance, today, lost Euro USD 2 times. That's 14 pips together. Okay, cool. What was the other trade I took? I took GU, but I took break even on that. Cool. I took gold, 290 pips. Laughing, chilling. Okay. Like once you start looking at things in that way, and again, what's the other thing I do? As you guys have probably seen, okay. Let's just say I'm not going to measure it, but again, what do I usually do? Boom, 3 to 1, take 50% partials. Okay, and let me just move this, let me just move this so you guys get it. But let's just say, boom, 50% partials, and then what would I do here? I'm like, cool. And again, let me move this here. Then when it does get down to 10 to 1, 90% partials, leave 10% running and let the vibes continue. Okay. Once I started doing these two things, my trading results changed completely. Okay, changed absolutely completely. But let me actually look at some chats right now. To actually see what's happening. I'm sure I'm missing out on a lot of questions or whatever else. Damn, there's a lot of questions, bro. All right, where do I start? Jeff never loses. Ah, Mark, I wish that was the case. I lose. Okay, if you're looking at my portfolio, I think there's like 40 to 50% of losses in there. Okay, but again, why would I stay consistent and profitable? Again, things like doing a 3 to 1, 10 to 1, or simply just doing the same lots, not same lot size, same pound or dollar amount every single time. So I know exactly how much I'm going to lose if I do lose. Okay. That's what makes the biggest difference. Nothing to stop us. There were no FVGs. Nothing to stop us as there were no FVGs. Dapper, I'm guessing you mean for this trade right here, right? So if we're taking out the lows, I mean, there's nothing to stop us because we've created liquidity. Let me just go to the 15-minute. Okay, so we created, let me move this chat box to this screen. Okay, so we created liquidity right here. Okay, and then when you start looking left, there's actually nothing. There's nothing to stop us. Okay, everything else is filled. Okay, yes, you can argue maybe there's this tiniest gap here of this Asia range, but is that really something that you think price is going to just halt and then reverse? No. So I'm looking at further drift. Again, still nothing. Potentially on this demand candle, but what is it in line with? Look at this trend line, which is why I put a sad face because I know all these guys. Because when people are trading trend lines, I'm not sure you guys have ever traded trend lines because again, you probably know better if you're, especially on my session. If you're trading trend lines and you got this trend line, where would you put your stop? Boom, right there. I'm going to make this red as well. If you're trading trend lines, where would you put your stop? Stop 1. Okay. If you're trading this trend line, let me check this drawing tool. Okay. If you're trading trend line through here and somehow you entered here, where would you put your stop? Right here. If you're trading this trend line and it didn't touch and you somehow still entered there, where would you put your stop? Right there. If you're trading this trend line and it touched perfectly, where would you put your stop? Right here. If you're trading this, where would you put your stop? Right here. So all of a sudden now, we've got 1, 2, 3, 4, 5, 6 points of liquidity to take out. Okay, that the market is going to be relentless. And let's not forget, shall I just educate real quick? The algorithm does not see candles. It just sees liquidities and numbers. Okay, and this is something I've seen from someone that traded at Barclays before. They showed me their screens or whatever else. Okay, I mean, they don't work there no more, which is why they could show me some stuff. Okay, but they don't see it in numbers. I mean, they don't see it in candles. They see it in numbers. So all of this is not candles. The candles are a representation of the numbers that these guys are seeing or what the algorithm is seeing. Okay, so they're seeing numbers like, where's everyone's money? Boom, liquidity, 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 liquidity. But to us, we're seeing it in the form of candles and trend lines. Okay, the algorithm doesn't give a shit about all of that. Okay, so which is why I'm saying there's nothing stopping us. So when does it actually stop? So I'll do this. So again, that's the lowest point it came to, right? So remember where this trend line stopped, right? Okay, that's the lowest point it came to. Lo and behold, where did the trend line really start? It started right here. So it was happy to say, you know what, we'll leave this low for now. But all you trend line bastards, we're taking you up. Okay, that's literally what's happening. Okay, so when I say there's nothing stopping us, that's exactly what I mean. Okay, I hope that makes sense in the most straightforward way possible. Okay, I hope that makes sense. Where's my chatbot gone? It's here. I've been rushing into trades and have now reached the stage to drum confrontation into my oh, okay, yeah, you definitely need that discipline, John. You definitely need it. Okay, patience. Again, sometimes even last week, I think last week or the week before, we had this shittest week. I think I sent out like 1 or 2 trades for the whole week because I didn't see anything I liked. Okay, and when I tried to force a trade, we lost, and I was like, yeah, I should have even taken that trade. But again, if you don't see what you need to see, just don't take the trade. Or if you're not comfortable with how things look and you're like, I don't really want to risk that, just don't take the trade. Okay, it's okay to miss out on trades. And again, like one of my mentors says, it's not Pokemon, you can't catch them all. Like, and that's what I used to do. I used to try to catch every single trade, but you can't catch them all, like, unfortunately. Okay. I wish I could, but you can't. Like, you're either gonna be sleeping, you miss it, or it's gonna happen in Asia session and then you wake up and then you wake up too late by 10 minutes and you miss it. Like, you can't catch every single trade, unfortunately. Okay, unless you literally build a robot that's literally sitting in front of the screen and does exactly how you want to trade and think and everything else, but it's not gonna happen. Okay, so yeah. What template do you use to mark up the different sessions? And yeah, I mean, this, I'm not gonna lie, yeah, this is like a whole thing that I had to go out my way to get. So it's not just like, yeah. So yeah, but if you want Asia session and all of that kind of stuff, just type Asia session range. I'm sure you see a shit ton of indicators that come up with Asia session. But yeah, this is like a whole setup that I had to literally have to go out my way to get and set up, and even this, but I'm not going to explain all of this now because it'll make zero sense to you guys. So yeah, just type Asia session range and you'll find something like this. So again, what you want to do is get your Asia session to be starting at 11 p.m. UK time and then ending around 6 a.m. UK time. And then London session, okay, kicks in at 8 a.m. and then New York session kicks in at 1, but we want to trade at 2 because that's when the trap actually happens. Okay, so yeah, that's a whole thing in itself. So yeah. But I'm still happy with the trade for sure. Yeah. I mean, well, why yeah, I'm sure we'll be happy with the trade. Profit is profit, and then stuck on that. Why is the lowest one the safest one to hit? When did you ask that for 8:30? What was I talking about at 8:30? Why is the lowest one the one to hit that part? I don't know which one you're talking about. Most likely one for price to tap into compared to the other two higher. I'm trying to think what was I talking about? Obviously, I was talking about gold, but now I'm wondering what exactly I was saying at 8:30 around that time. Why is the highest? Oh, wait, I remember. I think I know which one. I think I know what you guys are talking about. Okay, you guys are talking about this, right? You guys are talking about the entry here. Okay, I'm guessing that's what you guys are talking about. But why is the so what was your question again? Why is the lowest one the safest one to hit? Oh wait, that point you said fair after. Okay, cool. So I'm guessing that made sense. But so let's zoom into this again. Okay, so I'm guessing you guys were talking about this. Let me just look at the meshes just to say the 5 entries on gold. Okay, cool. Okay, cool. Yeah, so yeah, with this again, like I said, it's just in understanding the minor structure shifts. So again, we had this in here. So that was a minor structure shift. So we already understood that we've got this and this in here. But obviously we would prefer if we could get a higher one for restored ratio purposes, of course. But understanding that is gonna come up one of these areas, I'm not sure which one, so I'm just gonna pick this one. And my risk is still going to be in line with that. Plus, again, that's a breaker block. Not my favorite kind of block to trade, but it's a breaker block. And obviously, this is the mitigation block that we would prefer, but breaker blocks work more often than not. So when you understand the risk is still minuscule, why not just take the whole thing? Okay. And if it does come higher, okay, no problem. You're going to be in drawdown, but you know you're just going to take that trade in there as well. So if anything, could double up or just leave it and just say, cool, you already put the risk. And if it does break this high, the whole trade wasn't going to work in the first place. And you leave it as that. Okay. And then obviously this one, okay, breaks the external. Okay. Yeah, sorry. I borrowed this one, right? Okay, this one breaks the external low and then it comes back and then we do the exact same thing again. Okay, so I think that answers your question for when you was talking about. We put in a trade in live and so hell, bro. Like this is the wrong call. This is not the call we're trying to be trading right now, especially at this time. Okay, cool. So I hope that answers that. What else did I miss? Same money amount regardless of pip stop losses dictate the lot size. Yep, exactly that. That part I've said that to you before, bro. I remember we done a 101. But yeah, literally. Mark, see the trend line bastards. Your rubbish life. Okay, I've tried a few. All right, cool. I'll see what I can do. But yeah, we're putting a trade. Apologies, my bro. I was gonna say, yes, bro. I'll do it. All right, say no more. Okay, you're saying that's what you do now. All right, say no more. Say no more. Happy. Dapper? How's it been working out for you in regards to since you started doing that, understanding exactly what you're going to be risking for, regardless of the stop loss or whatever else? I mean, stop loss amount. How's that been working out for you? And as we speak, I'm just going to break down. So this is something I'm going to put on my website. But this trade of last week, again, this is a classic example of what you call classic trade. Okay, and again, this one came short of what I wanted it to do. But I just want to break this down real quick. Again, this is something I'm going to break down on my website and potentially YouTube. But yeah, definitely, I put all these kind of stuff on my website now. I'm just waiting for my new speaker to arrive because every time I record things, all my fan of my laptop starts blowing and it just sounds like an aircraft's about to take off. So I just need to get my new microphone and then I can start making the videos properly again. And anyway, so remember when I was talking about smart money traps and whatever else? Okay, so this day, what do we get? Okay, here you go, some more trendline bastards. Okay, so what do we get? So I got my low of the previous day. Okay, I've got my high of the previous day, which so coincidentally turns out to be like a quadruple top. Okay, so I'm looking at this, I'm thinking, cool. I've got this big ass highs all here. Okay, we come out Asia session range, we're inducing to the high side. I'm like, cool. I see this candle here, and straight away I know it's a smart money trap. Why? Okay, it's a candle that doesn't really mitigate anything. It's just chilling. Okay, remember, it's like just hanging around. That's when you know it's a smart money trap. It's just hanging around. You're like, why are you there? Okay, so again, we get a reaction. Okay, price shifts down. What does it do? It shifts down to do what? Tap a trend line. So at this day, trend line traders were really happy until the last point. So again, let's just do this exercise again. If you're trading the trend line, where would you put your stop? And it moves up there. Boom. Okay. If you didn't enter off this trend line, but somehow decided to enter, stop. Enter off this trend line again, stop. Enter here for some reason, stop. Enter here, stop. Enter here, stop. And old style Asia session low. Okay, and then obviously from here, we haven't really got much unless you're looking at 1 minute maybe. But then the next liquidity point is down here. So you can see exactly why I was targeting all these areas. Okay, so we've got trend line bastards, going on stop loss here. Okay, we've got equal lows and support and resistance traders doing their thing. So again, now the game is liquidity. We target everyone, trend lines, support and resistance traders, SMTs, everything. We target everyone. Everyone's getting clapped. Okay, so this is the extreme area that I wanted to take out, right? So what do we get? Price cycles up. Okay, London session open 8 a.m. Okay, then starts floating sideways. Then we're induced to the downside and then mitigates up. Now we've fallen quite short of the smart money. So some people are entering early already, stop losses here. Then it goes up, potentially takes them out. Or who knows, they might have put it on top of here. Then these guys, they're like, oh, you guys should have waited longer. Then they get in, they put their stop losses here. Gives them the reaction they want. Everyone's happy. Trendline traders, now they're coming in. They're like, oh yeah, you guys are going to lose because now our trend line's in play. So now trendline traders take out smart money traders. Okay, equal low traders get taken out through here as well. Okay, price moves up. Trendline traders are happy. Some more stop losses, more entries through here potentially. What are we waiting for? We're just in the background. Who's seen that meme when? Who's seen that meme when there's like a battlefield and then you just put wherever you would put, and then there's just someone just chilling in a mountain, just like waiting for all the bullshit to be done, and then yeah, the whole thing. But I'm sure you guys know what meme I'm talking about. This is where we're just chilling. We're just waiting for all this bullshit to be done, and then we're like, all right, cool. Smart money trap taken out. We've got our extreme high because there's nothing else here. No, I mean, you've got this tiniest gap here, but again, we already understood what this price action did. So now price taps into our 5-minute supply. So you can, again, take the extreme entry, similar to what we did with gold today. We could take the extreme entry, which is what I did on Friday. Was this Friday? Yeah, Friday. Okay. Took the extreme entry, but if you miss the extreme entry, what can you then do? Okay, what can you then do? 1 minute can be your new best friend. Okay, because what are we now looking for? So if you missed the extreme entry, so now what are you looking for? So now we're waiting for an internal or external break, right? So internal break, I mean, technically, you could mark out that. I mean, that's just being really extreme, but actually, let me click onto this. This is being really extreme. But again, for me, why isn't it letting me move this? Okay. For me, I would just waited. I mean, you can look at this. I mean, that's very, very minuscule, but I would have just waited for this to be broken. Okay. This will be my just low. Okay. I mean, the external one is enough. I mean, that's what I would want, because that other one is just, I mean, that's really extreme. Okay. I mean, that's like right there. So when I'm looking at this, I'm like, what's the last push up? This was the last push up to take out all these highs and push the highest point. So now I know if they wanted to continue going higher, they will respect to this area. Okay. Which they technically do for a little bit. Okay. Tricking people. But what's actually happening? Okay. Trendline bastards are getting created again. Okay. So this is what I'm saying. Liquidity. It's taking out everyone. Okay. So it starts creating a trend line again. Okay. Oh, I forgot I'm on that thing. Okay. It starts taking out everyone again. So again, trend lines start getting built up in here again. Okay. Equal low traders. Well, if they traded, where's their stop loss? Just under here, right? Trendline traders, if they're trading, where's their stop loss? Above here, above here, above here, wherever it is. Okay, they're trying to trade here again. Okay, put a stop loss here. So what happens? Price comes down, takes out equal low traders. Okay, even does this another break here. Okay, creates more liquidity. Okay, equal lows through here. Okay, you can see how these things are happening over and over and over again. And you just need to understand the patience you need to have to understand all the bullshit happening, and then saying, all right, it's my turn to get in. So again, if you didn't get into the extreme, you're just like, all right, cool. Let me wait for all this bullshit to be done. Equal low traders taken out. Okay. It comes even lower, takes out more liquidity from here. Now trend lines are being built up. Their stop losses is here. So what does it do? Comes up. Trend line trader taken out. Trend line trader taken out. Again, there's this tiniest gap through here. Okay. Then this is where your entry technique comes in. Okay. Smallest gap through here. You can literally do that if you wanted to. Okay. Boom. IPA. Put your stop above that high, which was the original entry. Okay, boom. But if you don't want to do that, you're like, you know what? It's still quite messy for me. I'm still quite not sure what's going on. No problem. So again, what do we get? The same cycle happening again. Internal low gets taken out. Okay, then external low gets taken out. This is the high that pushed all of this up. Okay, both of them get taken out. So what do? Price comes up into this mitigation area. Okay, just slightly misses it maybe. Actually, no, that's cool. So it comes up into this mitigation area. Okay, I'm just wondering, does it touch the body? Okay, just about misses the body, but this mitigation area in here. Boom. There's your entry. Okay, so if you missed all of this, and you didn't want to take this or this or that, blah, 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 boom, there's your entry. Okay. You do your risk to reward ratio. Okay. Boom, short position. Okay. Put above these highs because you already mitigated that IPA. So there's nothing else for it to go up into here. And if it does go higher, it's going to come for this high. And you don't want to be in that. Okay. Because the trade is basically done. Then what are you targeting? This is where the fun kicks in. Okay. This is where the fun kicks in. Remember these equal low traders? Take those guys out. Remember the trendline traders? Take those guys out. Take everyone out. Okay. Just take everyone out. Okay. Boom. Okay. And let's go back to the 5 minute. Okay. Boom. We haven't even finished taking those guys out. So take those guys out, take those guys out, take these guys out minimum. And then obviously you can end it here or still target this low, which is what I was targeting. But it just done this area here. So again, what does it create? And I'm going to borrow this. Okay. It creates equal lows for what? For the future. Okay. So target. So now I know there's equal lows for the future. Okay. I'm going to delete all of these now. It's not letting me do it all at once. Okay, but yeah, are you guys getting the point? Are you seeing the same thing over and over again? Okay, are you guys seeing the same thing over and over again? Let me just look at the chat box. Jeff has been a while. Oh yeah, Afua, how you doing? I didn't realize you're on a call. Good to see you trading again. Where do I get the chart for reference for in the? Wait, let me read this again. Where do I get the chart for reference for in the between move to clear liquidity? Wait, Afua, what are you talking about exactly? What? I don't know if I'm reading this correctly. Where do I get the chart for reference for in between clear liquidity? I'm not too sure. I'm not sure if I understand that question before. Maybe reword it. I think you asked me two things, but I'm not sure. You shared a different screen with the charts. A different screen with the charts. Are you talking about my print screens of stuff like this? Is that what you're referring to? I'm not sure if that's what you're referring to. Or you mean my actual pictures that I used to teach? My pictures that I used to teach. Oh, these. Okay. I see. Yeah, I'll just put in the chat. I'll put in the chat. But you should have these. You've been one of my students and everything from time. You should have these, unless you just literally deleted it and just came back into trading. But yeah, good to see you anyway, man. I ain't seen you for or heard from you in a long while. But cool. So in regards to this, again, after we've taken all of this out, I would have loved all of this to be taken out, but then it just creates equal lows. Okay, and then price then does its thing. Okay, we take out the highs. I'm just gonna X this out because this is gonna take forever. Okay, so let me just go into the 15 minute. Okay, remember those lows that were right here? Today, absolutely obliterated. And again, this is what I'm saying. It happened way too quick that I mean, when I was again, oh yeah, this is another trade I was looking at today. I was trying to be cheeky in here to buy this up into here, right? Okay. And potentially higher to then get a cleaner move. But yeah, it just didn't happen. It just obliterated everything. Okay, so yeah, again, liquidity has always been printed and just a matter of time before it gets taken out. Okay, so yeah, exactly. So I can't even remember the jargons. Ah, damn. All right. Well, yeah, no, good to see you back in the game. Again, I think you should still have my number. So yeah, if anything, just message me. And then yeah. What else did I miss out? Finish on. Okay, so I'm gonna be saying trendline bastards in my sleep tonight. Oh shit. You should. Okay, cool. I think she's talking about your power. Okay, yeah. Figured it out now. Okay, cool. Say no more. But yeah, trendline bastards are gonna be it's gonna be a thing now. Okay, so yeah, Naz, yeah, today, I mean, yeah, everything was just it was too quick for me to even try to catch a move if I wanted to. Okay, same with US 30. Same thing. I just yeah, way too quick. Because even this when this happened this morning, again, Asia session midline is a strong thing that I do now trade. Again, if you don't follow me on IG, just follow Kaizen Pips on IG, and I do breakdowns of this. And then on my website, I've got a section now where I actually break down trades. Again, I'm waiting for my new microphone, but again, on my section on my website, I break down trades to show you exactly why I'm taking trades, how I caught it, what my thought process is, all that kind of stuff. So yeah, definitely check that out. But yeah, on Kaizen Pips, again, I've got pictures of some of these things, and then I do little worded breakdowns. So yeah, if you want to check that out, I mean, that's a free way to learn, right? So yeah, check that out as well. But yeah, these ones just happen way too quick, and yeah, I just couldn't catch it in time. Okay, but again, not so much of a market open thing. I just wanted to teach. Okay, because I feel like I haven't done it for time with shifting groups and doing a lot. So I haven't actually taught properly for some time. But yeah, that's why I just wanted to do a little breakdown of exactly how we're trading and what we're looking at and how we actually get into trades. Okay. And then, yeah. So I hope that session's been useful for you guys. Hope you enjoyed it, got some nuggets from it. And yeah, is there any last questions before we actually go? What's my website URL? Kaizen. Okay, so kaizenpipsology.com. Okay, so you can check that out. And then obviously my IG, kaizen.pips. I just put Kaizen Pips. And then you see the IG there as well. Okay, so yeah, definitely check that out. And then yeah, you'll see just some more things. Um, what else are we looking at? Good to see you back, Jeff. Been a while. What does medium IDM? Okay, so yeah, medium inducement or major inducement. That's what my IDMs mean. So the question was referring to what my purple M IDM means or whatever else is either major or medium inducements. Okay. And again, that's a breakdown of something that I'll teach more personally or whatever else. I'm not sure if I'm going to upload this video on YouTube, so I'm not going to start teaching everything for free. But yeah, just inducements basically. Okay. What else? Where do I check out all your recorded vids? So Jamal, depending on, yeah, I mean in a recording section. Okay, you find everything in a recording section. Okay, so yeah, you see all of that there. Well, cool. I don't think I'm missing out anything else. That was an amazing session. Say no more. Appreciate you, bro. But cool. Say no more, guys. I'm gonna leave it as that. And yeah, I'll catch you guys real soon.